We live, baby. We live. The first cousin over here. The first cousin over here say we in the building. Happy Easter. Happy Resurrection Day. Happy what else can I say? Happy Easter to everybody that celebrate Easter. We um we gonna get into it. First cousin over there say we here. We in the building. Y'all pull up on YouTube. You was watching another live on IG. Who you was watching on IG? Beautiful flaws. First cousin to get in the building say we here and we gonna get it. Y'all see the pin comment I got over there that say go live. I mean go to YouTube. Y'all go to YouTube. Ain't nobody over there yet. I don't see no comment. Ain't nobody over there yet. Who over there? Y'all pull up. Somebody pull up and say we here. Okay then, I see you. We here. Bang. Let's get it, man. Let's get it. That's all we need. All we need is one. All we need is one. What we talking about today, Tim? This is what we talking about today. We talk about how and why to create a trading plan, trading strategy, trade journal, how to journal, how I journal. How and I'm also throwing in there for my folk that say, Tim, you always talk about trading. I'm throwing in there how to set up a long-term portfolio. I got an example for setting up a long-term portfolio if you don't want to be no trader. You don't want to be a swing trader or a day trader. I even got that in there for you. You feel me? So yeah, man. Good afternoon. Good afternoon to everybody. Appreciate everybody pulling up. Appreciate everybody taking their time on the holiday to come hang out with me, to hear me talk. You know what I'm saying? If y'all enjoy what y'all hear, hit the like button, share it with a cousin that you think might get something out of this. And if you really want to hear me talk for a long time today, tap back in on the Come Up Series YouTube page tonight at 8 o'clock, and I'm going to be running my mouth again on Supplemental Sunday. You feel me? All right, man. If y'all can hear me, put a one in the chat. Because I don't want to get all into it and then y'all be like, oh, I can't hear you, Tim. And if y'all still pulling up on IG, jump over to the YouTube page, www.youtube.com/thenewtlr. Pull up on the YouTube page. That's the last time I'm looking at IG. Anybody that's still over there, direct people to the pinned comment. Go to the YouTube page. Let's get into it, man. Let's get into it. What we talking about today? Why is that up there? Okay, what we talking about today? Just do you. What, Tim? Why you call it just do you? I'm glad you asked that question, little Timmy Rogers. I call it just do you because, matter of fact, let me go back full screen for a second while I explain to little Timmy Rogers while I'm calling this episode Just Do You. The reason why I'm calling this episode Just Do You is because we as new investors, old investors, seasoned, not seasoned, we have the tendency to look up slash idolize slash try to emulate our favorite investors and traders. And a lot of time we do that uneducatedly. We just mimic what we see. Like, I got full transparency. When I first started learning about options from the Come Up series, I wasn't really doing all the work to try to learn everything. I was just buying whatever Mark said buy. You know what I'm saying? And then I ain't know when to get out. I ain't know why I was buying it. I was just buying it. And then when I get some money that I think look good, I close it. You know what I'm saying? And then, so after that, my homeboy, he say what? But yeah, he asked me what color shirt I need. Cause he made me a shirt that say I'm not a fiduciary and it get keyed out cause it's fluorescent. Anyway, squirrel. Anyway, I ain't know why I was getting out. I ain't know why I was getting in. I was just doing it called Mark said buy. Mark said buy XLK, I bought XLK. Mark said buy XLY, I bought XLY. Mark said buy Tesla, I bought Tesla. Mark said buy it. I was just doing it just cause he said it. You know what I'm saying? And then I ain't never really I ain't had no plan. I ain't understand when I got into stuff, I ain't know where to get out. And I saw, like, everybody saw the whole big blow up with some cousins that were going out there saying, Mark and Jolene, they getting over on the community. They telling people to buy this and not telling them when to get out. You grown. Nobody shouldn't have to tell you what to do with your money, but that's neither here nor there. So what we gonna do today? I'm gonna break down the way I see things when it comes to setting up a trading plan. I like to kind of make my trading plan, trading strategy. I like to melt it all into one thing. You know what I'm saying? Instead of having like a trading plan, then a trading strategy, and then a setup, a trading setup, all that. I just put everything into one thing with the rules, with the entries, and I put everything in one thing. So I'm gonna break it down the way I see it. I'm breaking down why I see it like this and like that. Then I'm gonna show examples of how I journal my trades, and I'm gonna show examples of a long-term portfolio. You know what I'm saying? Something that I put together, you know what I'm saying, for it's a real portfolio that I actually put together, you know what I'm saying, for my mom. I call it the grandkids portfolio because she want to do something for the grandkids. And you know what I'm saying, I just got the real portfolio, how I initially set it up to start it. So let's get into it, man. Without further ado, let's get into it, man. Here we go. Just do you. That's why I call it just do you. You see what Spice said? You fail to plan, then you plan to fail. Y'all remember that right there. Y'all remember that right there, because y'all gonna see that later. Let's get it, man. Y'all know what time it is. Y'all can do this with me verbatim by now. What is it? It's the disclaimer. Y'all know what the disclaimer is, man. I am not a fiduciary. That's what my shirt said, the one that got keyed out. I am not a fiduciary. I am not a financial advisor. I am not a fiduciary. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decisions. You feel me? Now that that's out of the way, y'all know what it is, man. I talk about my family every week. I ain't even got to blow them up no more, man. I ain't got to talk. Y'all know who it is. Kiki Williams, my little sister Kiki Williams. Shout out the Come Up series. Speaking of the Come Up series, y'all want to hear me running my mouth some more later on tonight? Y'all pull up at 8 o'clock tonight for Supplemental Sunday. I'm going to be running my mouth again. The Bond Bullets, everybody know Jay the Trader. Everybody know Stock Zave with the runners. Everybody know Lex. Lex is no longer Learn with Lex. She's the chartist. You still go to learnwithlex.com to support her with, you know what I'm saying, her Wealth Walk merch. Y'all do that. Charles Coney, y'all know him. Traded with a dummy. Mark, Mr. Controversy himself. You know what I'm saying? Mr. Joe Rogan wannabe himself. Shout out Tag and shout out the Professor, man. Y'all know what it is, man. That's my family. Let's stop talking about family. Let's stop talking about stuff. And let's talk about what? We gonna say that imitation is the greatest form of flattery. But what's that but? If y'all still pulling up on IG, go to YouTube, man. youtube.com/thenewtlr. Imitation is the biggest form of flattery. But what do you mean but, Tim? I'm glad you asked that question, little Timmy Rogers. Is that you in the back? Yeah, that's me, Tim. Why you say but? I'm explaining it to you. The reason why I say but is because when you jump into the market and you just been imitating your favorite investor / trader, what's going to happen when they leave and it's just you in the market? Huh? When it's just you in the market, you know? If it's just you in the market, do you have a plan, or are you going to come tumbling down like this young brother right here because you don't know how to navigate them slippery steps of the market? You know what I'm saying? When the market start coming down, when the market start falling, are you going to fall down the stairs like this young brother right here? Are you going to come tumbling? When the rain comes tumbling down, when the rain. I think say when the walls, but I don't know. It's something like that. But yeah, are you going to come tumbling down? You know what I'm saying? Are you going to follow a written plan? Right? Or you just gonna try to remember what your favorite investor / trader said that he or she was doing. You know what I'm saying? What's gonna happen when it's just you in the market? Hopefully, it's you gonna follow a written plan, and it's not the latter. Hopefully it's not the fact that you ain't gonna be like little Timmy Rogers back in August 2020, you know what I'm saying, just buying XLK, or September 2020, just buying XLK 2023s just because Mark said buy XLK 2023s. Hopefully you ain't gonna be like little Timmy Rogers in 2020. Hopefully you're gonna have a written plan. That's what you're gonna be doing. You know what I'm saying? So if you do got a written plan, right? If you do got a written plan, you good. But guess what? If you fail to plan, you plan to fail. Remember what I told y'all to remember that? Remember what I told y'all to remember that? When Spice put that in the chat. Remember what I said? Remember that phrase right there? Remember? So I hope y'all got y'all pencils and y'all paper out, but you really ain't got to write it down, because you know what? If you click, it's a link down there in the description down there, it's a link down there that say Tim's Tidbit slides. I think that's what it say. But if you click on that, you can go to the Google Drive and get these slides right here and any other Tim's Tidbit slides in there that you want for absolutely free. It's in there for the free 99. You can get it for the free 99. It's absolutely free. Just go in there and get it and download to your heart's content, right? So if you got your pen and your paper like this young lady right here looking all ready to answer questions, we gonna talk about this right here, right? Do your research / homework before starting to do anything. You want to start doing your research on what it is you want to do. If you want to be a long-term investor, if you want to be a swing trader, if you want to be a day trader, if you want to be an options trader, if you want to be a futures trader, if you any kind of trader you want to be, I jalapas for hitting the mic. Any kind of trader you want to be, you want to start doing your homework first to figure out what does being XYZ type of trader entail. You want to start doing your research and figuring that out. You know what I'm saying? Coming to communities like the Spider Gang, going to communities like S2F, going to communities like the Runners, doing one-on-ones with Charles Coney, you know what I'm saying? Doing one-on-ones with Kiki Williams, you know what I'm saying? Doing one-on-ones with Draco, you know what I'm saying? Getting with people like Zay, you know what I'm saying? I don't know if Zay still got it open, right? But getting with people to figure out what does it take to be this type of trader. You know what I'm saying? If you can link up with somebody that's great. If you can't, Google is your friend. You know what I'm saying? Google it. Wikipedia is your friend. Wikipedia will put you up on game, right? So now that you figuring out how it is to be XYZ trader, you want to know your trading identity. Meaning, like I said, you want to know, all right, now you know, I'm not a day trader, I'm a swing trader. I'm not a trader at all. I'm an investor. I can't trade options. I want to trade futures. Or I can't trade futures. I want to trade options. I just want to swing trade shares. I just want to buy shares and sell them. I don't want to hold them. You know, figure out your trading identity. Once you know your trading identity, you know what I'm saying? Now guess what? You ready to start writing. You know, it's 2022, so you probably ready to start typing. You feel me? Right? You ready to start typing. And the first thing you want to figure out, the first thing I want to figure out when I start typing is, what am I willing to risk? How much am I willing to lose? You want to establish that up front. What, Tim? Why you want to establish that up front? I'm glad you asked that, little Timmy Rogers, because what a lot of people will not actually just tell you is losing is a part of trading. Losing is a part of trading. If y'all still pulling up on IG, pull up on YouTube so you can see the screen, see the slides and all that. YouTube.com/thenewTLR, right? You want to be able to be honest with yourself on how much you willing to lose, because what a lot of people on Instagram and all over the internet won't tell you is losing is a part of it. And if you don't have strict risk management in place, you will lose your shirt, because nobody wants to lose. Nobody wants to accept the loss. And if you don't have a strict strict plan in place to follow to mitigate your losses, you will lose far more than you will win, because losing and winning makes you emotional. When you lose, you try to beat the market. When you win, you get greedy and end up losing more. You become very emotional when you're trading. That's why you need to have a strict written plan. So you're in the thick of it, and you can't, this thing ain't working. You need to be able to look and say, okay, I need to tap out. Okay, I done lost 2 trades. I need to be out. Okay, I'm done for the day. You need to understand what you're willing to risk, right? Then it ain't no particular order of all this, but there's some stuff you want to think about, including when you're putting together your strategy, your plan, right? You want to set goals. You want to have goals set. Like I say, rules. You want to set rules. And most important of all, document everything. Document everything. You want to document everything, right? Now, we're going to get into, the next slide, I'm going to show, it's going to be some samples of stuff you want to include, what I want to include in my trading plan / strategy / rules. This ain't no all-inclusive list, but it's just stuff you want to think about putting in your plan or strategy. It ain't in no order, no particular order, nothing not like this. This just some ideas to kind of get your gears turning if you ain't never tried to do this, right? So here we go. Sample trading plan / strategy and rules, right? Boom. First one up. Right, this is the goal. It looks like a goal. I will become a consistently profitable trader. Right? Notice, right? I didn't say I will become a good trader. I will become a great trader. I will become the best trader. I ain't put that right there. For me, I want to become a consistently profitable trader, because being a consistently profitable trader is far more valuable than being the best trader, to being the GOAT, to being the best investor of our generation, the best. It's far better than any of that. I'll take consistently profitable over the best any day. You know, just like in sports, a coach don't want the best. The coach wants somebody that's coachable. If you're coachable, the coach can make you great. But if you're not, you can be gifted with God's talent. But if you're not coachable, guess what? Coach don't want to deal with you. So I just want to be a consistently profitable trader, right? I will follow a well-devised written plan. You feel me? It's got to be well devised, meaning you got to put some thought into this thing. You got to back test this thing. You got to understand how this thing works in all markets, and you got to follow it to the T. If you violate what your plan say, if you fail to plan, you planning to fail. That's what they used to tell me in the military, right? I will always be disciplined and obey my rules. See what I just said? You see, I got that written down, and I just went into it talking about the other one that say following the plan. I will always be disciplined and obey my rules, because when you start breaking rules and getting emotional, there it go. There it go. I will learn from every trade. When you lose or when you win, learn something from that trade. Try to figure out what could have been done better, what was done wrong, what was done good, what you did exactly right, what you did almost right, what you eased about, what you bent the rules and got away with, what you bent the rules and got hit with. Be honest with yourself. Learn something from every single trade, right? I will model the best trading practices. Meaning that's the part where you looking up to somebody else. If you see somebody doing something that's like going well for them, you be like, let me see if I can implement that into my strategy. You know what I'm saying? Model after great people. That's how you become better, by looking at somebody that's doing something and seeing what parts of what they doing you can add to your repertoire. You know what I'm saying? Model after the best trading practices. Don't model after all of that. You know what I'm saying? YOLO, all of that. Pip challenge. Let's do a 20 pip challenge a day. Let's see if we can, you know what I'm saying? Forget all them challenges. Just do you. If somebody, hey, you want it, just do you. You know what I'm saying? The only thing you want to challenge yourself to do is learn something from every trade and support and uplift your community. Have accountability partners, support and uplift them. Hey, cuz, hey, you breaking rules, cuz you know what? Hey, you know what I'm saying? That's what you want to do, right? I would use a trading coach. Look at that. It's in there. I would use a trading coach and accountability partners to guide me through new or difficult areas and to push me. I was just talking about that. I was just talking about that. Having accountability partners, have trading coaches. I ain't no coach. I'm just your cousin, but I answer a question. You feel me? I'm learning new stuff every day. The nephew Quanti came on here and laced me up last week, man. You know what I'm saying? He laced me up last week. I ain't too proud to ask somebody to show me something I don't know because I'm trying to get to the next level, man. I'm trying to set my kids up. I'm trying to set my kids up with this thing right here. You feel me? I want to learn all I can about this thing, right? I will thoroughly research the past performance of my strategy and trade setup. What does that mean? You want to go through and you want to back test that thing in every market condition to see, is this a profitable strategy or trade setup? You know what I'm saying? Because a lot of times people just mix up strategies and trade setups. Strategies ain't just a trade setup. A trade setup is part of your strategy. You know what I'm saying? Your strategy can be, you know what I'm saying, I'm a go into this size position and hold it for this amount of time and shave off this amount at this percentage and let this percentage run to the end and shave off this amount and then put it into this, or I might hedge against that. All of that can be a part of a strategy, but what gets you into your position is your actual setup. You see what I'm saying? So a lot of times we use strategy and setup interchangeably, but for Tim Rogers, they two separate things that just relate with each other real good. You feel me? It's like they need each other, right? I will back test my trading plan and set up all variety markets. I already said that, and record the results before trading live. Before you go live, don't be like, shout out to homie Mark. This my brother from another mother, Mr. Trader with a dummy. But me and Mark was talking a while back, and he said, man, I just need to get some skin in the game. I can't paper trade and a sim trade because it don't feel the same, and I sim trade forever. I become a millionaire. As soon as I go live, I lose all my money because the emotions are different. That's true. Your emotions are different when you go live, but you want to thoroughly back test your strategy and your setup before you use live money to know that this setup and this strategy and this plan will be profitable. Nobody that owns a casino will ever open that casino and start running those different gambling games unless they know that if we do the same thing over and over, we are going to be profitable. We may have a winner here one night, a winner there one night, a chicken dinner there one night, but they're going to come out on top every time. You see what I'm saying? So you want to make sure your strategy and your plan and your setup can be profitable, and you want to know what market conditions it will be profitable, so you know when to pivot. When you know, now just because you write your strategy down, your plan down, your setup down, don't mean you can't modify it. You don't abandon it if you hit a losing streak. You just know, hey, this strategy don't work in this market, and that's when you, what they say, sit on your hands. That's when you sit on your hands. You feel me? So, let me see. I will only trade one asset class or a derivative of. If you don't know what a derivative is, derivatives are like futures and options, and then asset classes are like equities, commodities, what else? Like real estate, like the different asset classes. So most of us deal with like equities or derivatives of equities. You know what I'm saying? Like the equities are like the stocks and all of that right there. And most of us deal with either the shares or options and futures. We deal with the derivatives of the equities market. You know what I'm saying? Most of us. And then you got like bonds and stuff like that right there, which is like financials or something. I can't remember. I ain't gonna start trying to act like I know all of it. Right? And then it say, okay, I will trade the SPY options contract. These are what you gonna do. Yours can say whatever. This is just an example. I will live trade the New York morning session Monday, Wednesday, and Friday from 9:30 Eastern Standard Time to 11 Eastern Standard Time. You know what I'm saying? I will paper trade the New York morning sessions on Tuesdays and Thursdays from 9:30 to 11. You know, these are just ideas. This is some stuff that you think about. Okay, oh, I can write that in mind. Oh, I can use something like that. Or you may say I want to trade the PM session. You know what I'm saying? I will commit to being at my trade desk 1 hour before the start of the morning session, meaning I'm gonna be there at 8:30 in the morning. You know what I'm saying? I will stop trading after 2 trades per day, win or lose. You know what I'm saying? This is all part of your strategy, your plan. You know what I'm saying? I would trade for profit by locking in 30% or shaving when a trade reaches 75% of its target. So that means you trading for profit, meaning it ain't all or nothing on every trade. Once like if you risking 10% on a trade to get, you know what I'm saying, 100%. Once it get to 75%, you lock it in 30% just in case it come back against you. It ain't all or nothing. You trading for profit. Or if you buying multiple shares, or if you buying multiple contracts, you shaving. You know what I'm saying? You shaving. Once it get to 75%, you shaving some off. You taking some profit, right? I will risk no more than 2% of my total cap on any open trade or trades. So if your max risk is 2% and you open up 2 trades, that means your max risk on both of those trades can only be 1%. You know what I'm saying? So if I make a non-system trade, meaning you break a rule, I will penalize myself by not trading the next session, right? And then the second offense of doing that, I'm gonna penalize myself by not trading for a week. You got to have, you know what I'm saying? You got to hold yourself accountable. You got to have consequences. Shout out Alexandra Cartwright and the Black Stock Doc. They got they accountability partners, and if one of them spiral out of control and break their rules, they got to set up where the other one got to send somebody this item of value. You know what I'm saying? I ain't gonna put their business out there what they got to send, but they holding each other accountable. Hey, if you spiral out of control and break the rules, you got to send me this item of value. You know what I'm saying? It's got a price tag on it that now one of them want to really spend. It ain't nothing outlandish, but don't now one of them really want to spend this. So that's a way of controlling them. That's very smart. That can be something that you put into your plan. You feel me? Now, the next slide. Do anybody got any questions? Got anything they want to say? What Mark said, profit is profit just cause you can get 100 options or 25 points on the NQ easily. Don't let your trade go negative. Exactly. You trading for profit. Lock in profit after a certain time. It ain't all or nothing, right? Documenting is as a 5 aspect. That's right. Okay, the next thing what we're gonna do now, this slide here, that's just examples of different rules, stuff you can put into your strategy, stuff you can put into your plan. That I just want to give some ideas of stuff that I've written in the past. I've adapted to my strategies. I've adapted this rule. This is stuff that I've personally done, and I just want to share some of it so that you can have an example. And like I say, you can download these slides and go back and, you know what I'm saying, you can print it out. You can write these exact same ones if you want to. I don't care, but just remember, I am not a fiduciary. I am not a financial advisor. Nothing I say should be taken as financial advice. Do your own research. Investing involves considerable risk, and you should always consult a financial advisor before making any investment decision. You feel me? Okay, the next slide that we're going to get into, this is an example of exactly how I journal my trades. This is exactly how I journal my trades. If you see up there where it says trade analysis, you see it's a sample trading log entry. You see up here where it says trade analysis, go back, Tim. You see up here where it says trade analysis. If this writing is green, that means it was a profitable trade. If this writing is red, right up here, if this writing is red, that means it was a negative trade, right? And so that's just how I do it. That's how I do it. And I do it electronically. I ain't got time to be writing in no book, right? So what I do, I have the exact candles that I was looking at, the exact time I took to, even if I miss a trade, if I missed the trade, right? That writing right there, what I was telling y'all, this writing right here will be orange. If I miss the trade, it's like a orangish type color. You know what I'm saying? If I miss the trade, so if I hit the, if I make the trade, it's green. If positive trade is green, negative trade is red. If I miss the trade, it's orange. And then, so what I do, let's start over here. I have my bias. I have my daily bias right here. And I do this on the time frame that I'm looking for the entry on. You see what I'm saying? So it's going to be on the 15-minute time frame unless I try to get the entry on a 5-minute or lower. You see what I'm saying? So most of the time I'm trying to get my entries off the 15-minute unless it's giving me something like, oh, I can drop lower, and if it's giving me a big reaction, I might be able to drop lower. So then the trade analysis part, right? So looking at this one right here, I wrote down after making overnight high, right? Let me zoom it out real quick so I can break it down for you. So right up in here, right up in this area. Let me turn this off. Right up in this area right here, that says overnight high. I'm gonna break it down. It's ONH, right? Down here, it says overnight low, right? Over here, it says 60-minute fair value gap made yesterday. And that's this big green box right there. I'm going to show all of that. I'm just giving an overview of the screen. Over here, it's talking about the trade. It says failed to break intermediate low, which was the overnight low, then made an aggressive move, creating a fair value gap before 11, right? This right here says stop loss. This right here says entry based off of max stop loss. This over here says profit target, right? And then up here it says what it was, right? And again, if it's positive, it's green. If it's negative, it's red. You know what I'm saying? Over here. And if I missed it, it'll just say 0 or nothing over here. It'll say either nothing be there, or it'll say 0 and be orange, right? Most time it just don't say nothing. Right? So here we go. Let me break it down how I do it, right? So I got my bias over here, right? And then, so when you look at, I'm trying to move it like that right there. Okay, so it says trade analysis, right? After making overnight high, price sold below midnight open to a 15-minute order block. Tim, what do you mean a 15-minute order block? I knew you was going to ask that, little Timmy Rogers. I knew you was going to ask that. This candle over here, right over here, if y'all can see where I moved, this red candle right here, right? That is a 15-minute order block within this 60-minute fair value gap, right? This big green area here is a 60-minute fair value gap. This right here is a 15-minute order block. What, Tim? What makes it a fit? Little Timmy Rogers, I knew you was gonna be asked. You the one in my DMs, little Timmy Rogers, always asking me about order blocks and breakers. You know what I'm saying? Little Timmy Rogers, go watch the ICT videos about order blocks and breakers. But since you asking me, I'm gonna explain it to you, right? So this right here, we was running up. The price was running up. We made this down close candle right here. At this particular time, the bias was bullish. So you had the bias was bullish, right? You made a trend change, momentum change, a momentum shift. You going up and you went to the downside, right? So you had a momentum shift, right? That's two. That's the second thing you need. Once you got the momentum shift, you know, so it can be 1, 2, 3, 4, however many candles in that momentum shift. It all count. And then once you have that momentum shift, you made a fair value gap when you traded back through that momentum shift. So you went down, and when you came back through that momentum shift, you made a fair value gap. Those three things, bias, momentum shift, fair value gap, that makes this qualified to become an order block. Right, and it's the same in going up. If this was green, you was going down and you reversed up. It's the same thing, but just the opposite way. That qualifies this to be an order block. Will it be? It may or may not be. But once it traded back down into it, you notice when it got back to it right here at this candle at the overnight low, when it hit this order block right here, and if you notice, it looked like it might have touched it right there. But when you hit that order block right there, price went back up. That's what lets you know, hey, that was an order block. Just the three things give you the high probability that it's going to be your order block. And once you can take a high probability trade off of that order block if you're an order block trader. Is it going to be every single time? No, because it ain't nothing 100% of the time. So there you go, little Timmy Rogers. There you go. That's what the order block was, right? All right, then, after the New York Open, price broke structure and created a fair value gap, right? Then, so I set the limit based off the max risk from the stop placement at 44, 34, 25, right? Got picked up at 11 on the 11:45 candle. Hit profit target at 13:15 candle, right? The emotional observations. Got greeted when the price started moving fast. I moved my profit target higher, but then I changed my mind and stuck to the script and moved the profit target back to where it was supposed to be, right? So I got the trade analysis, I got the bias, I got the trade analysis, I got the my emotional, like what I went through while I was doing the trade, and then I got everything marked up on the chart and it's saved into the folder so I can go back and analyze this at later date. So I got the 60-minute fair value gap. Let me know when it was made. It was made yesterday. If you go back here and look at these candles, you can see it was toward the end of the day. It's a 60-minute fair value gap. So from this candle to that candle, that's the close of the previous candle. That's the open of the next candle. You know what I'm saying? So that's the fair value gap right there. And then that's the overnight high, like I said before. That's the overnight low, like I said. And right here, it said I got failed to break intermediate low, which was the overnight low. So this candle here, like when it was trading down, this candle, none of these candles would break this low right here. And this right here is an intermediate low. You know what I'm saying? This is an intermediate low because it fulfilled this fair value gap. So that automatically qualifies this to be an intermediate low, right? And so if it's going in its downtrend, it's in a downtrend, and if it's going to continue down, then it should continue to break lows. It couldn't break this low, right? Since it couldn't break this low, right? It failed to break this intermediate low, and then when the price see, I said it failed to break the low, and then it made an aggressive move, creating a fair value gap. It didn't break this low, then it made an aggressive move, and this aggressive move has a fair value gap right here. See, it broke this. See, that's boop. That's a what you call it? Not the shift. Breaking market structure. That's a breaking market structure because we was going down, had an aggressive move, and broke these swing highs right here. Broke these swing highs, and when we broke them swing highs, we made a fair value gap. What's that called, Spider Gang? When you dip into the liquidity pool, you make a swing high, you make a swing low, and then you break one of the swings, and then the very next candle, you make a fair value gap. Somebody put it in the comments what that is. What is that? What do I call that? Dip in the liquidity pool, make swing high, make swing low. You break one of them swings with authority, and on the very next candle, you create a fair value gap. What do I call that? Somebody put it in the chat. Somebody put it in the chat, right? And then all this was done before the 11 a.m. candle, right? There you go, here to learn to share. Liquidity run reversal. Liquidity run reversal. Here to learn and share. DM me or Calandra. I'ma order you a I Got Options shirt, either a t-shirt or a sweatshirt, whichever one you want. I Got Options. I'ma order you a I Got Options shirt. The store ain't open yet, but just because you participate and you always be here, pull up, hit me in the DMs or hit Calandra in the DMs, and I got you. Right? And then the stop loss. Oh, and mind you now, and see right here, when this was the you got a fair value gap right here, and you got a fair value gap right here. I want to mention this, right? So notice this right here says entry based off max stop loss, right? My maximum stop loss that I'm going to take on any trade is only 2% of my capital. So based off of where I need to place my stop up under this low right here, I had to calculate what's my max risk, because this is a not really wide stop, but from the low to here, that's not bad, but we got another gap right here. So if I just try to take it off this gap right here, that's more than my risk tolerance. So I wouldn't have been able to take this trade. If I tried to take it off this gap, then I would have been good. But if I would have went to the bottom of the gap, I would have just got missed. In hindsight, I see that I would have just got missed. So only thing I can do is I'm going to only risk my max. So I set the price at my max that I'm willing to lose. And it actually, you can see it barely came down. It just came. It was like I maybe took one or two ticks of heat on this trade. Maybe one tick of heat. I don't know if you can see that bottom, but it's barely poking. Right? So whenever you go into a trade, just because you see your setup, don't just jump in if it's not within your risk tolerance. Understand your risk tolerance before jumping in. Now, that's the example on the trading log. We had the example of like the trading plan and all that right there. Now, for all of my long-term investors that don't want to trade, I don't want to trade, I just want to invest, I got y'all too. Because, you know what I'm saying? Hey, I set something up like this right for my mom. This is the actual portfolio that I set up. These companies right here. These companies right here is the actual portfolio. I'm glad you said 2%, Mark. Yeah, we're gonna talk about that in a minute at the end, right? So what this is a sample, and I found this out setting this up in Microsoft Excel. If you go in and you put in a ticker symbol, Excel will recognize that that is an actual ticker symbol, and then all this other stuff that you see over here, like where it says price, how it says price and sector, not the weight, that's me, but price, sector, the name over here, Excel will fill all of that in for you. It will fill all of that in for you because it knows that it's a ticker symbol. And at the end of the day, these prices will update to whatever the current price is per share. Yeah, I found that out making this spreadsheet up when I was putting this together. So what this is, if you look at it, it's got the total starting capital, right? The total starting capital, and it's got how I wanted to break it down, right? So the way I got it broken down is, this is an aggressive portfolio. Mind you, it's aggressive portfolio because it's for my mom's grandkids, right? So younger people can stand that, be aggressive. So I got tech is 29% of the portfolio, right? I got money set aside, 20% of the capital is set aside for options plays, right? Financials is 20% of the portfolio. Consumer staples is 10% of the portfolio. Energy is 6% of the portfolio. 10% is always going to be set aside for cash, and 5% is going to be put into ETFs. Well, Tim, why are you doing it like that? The reason why I'm doing it like that is because I got 5% of the money, which is really used as a hedge against the against the actual stocks in tech, financials, consumer staples, and energy. Because if you look at the ETFs that I'm putting the 5% in, the ETFs is XLK, XLF, XLE, and XLP. Those are, so whenever, like, just say Apple is not really doing so good, I got a little bit of money in the ETF where the other portions of XLK are doing good to kind of help mitigate some of when Apple not doing good. And then I got 20% set aside for options, so when the market is trending, I could use 20% of the capital to take advantage of the trending moves to make extra capital on, you know what I'm saying, to reinvest into these companies over here, right? And so now that I know the percentage, I want to break down all of this stuff, which equals 100%. Now that I know the percentage, I want to break down all this stuff. I know tech is 29% of the overall portfolio, right? So now these are the tech companies right here that I want in the portfolio: Apple, Microsoft, Amazon, Facebook, Tesla, Nvidia, right? So Apple is 9%, Microsoft is 8%, Amazon is 4%, Facebook is 2%, Tesla is 2%, Nvidia is roughly 2%, and if you add all these up, all of that equals 29%. All these tech say, if you add these up, that equals 29%. Then you go down to the financials. Berkshire Hathaway, JP Morgan, Bank of America, Global Spy, S&P Global, Morgan Stanley, Goldman Sachs. You know what I'm saying? Those are the those are the banks that I'm putting. And if you add up the percentage, Berkshire Hathaway is 7% of the overall portfolio. You know what I'm saying? And then JP Morgan is 4% of the overall portfolio. Bank of America is 3%. These percentage here is the overall portfolio. But then when you add up the percentages in the financials, that equals 20% of the whole portfolio. And the same thing for consumer staples, the same thing for energy. And then when you get down here to the ETFs, you notice I got tech, financials, consumer staples, and energy, because those are the sectors that invested in. So when those companies as singular companies aren't doing as well, the other companies, like when people start moving money to consumer staples, right? They're not always going to Procter and Gamble. They're not always going to Walmart. When people start moving money to energy, they're not always going to black what is it called, Diamondback. They're not always going to Diamondback. They're not always going to Occidental Petroleum. They're not always going to Exxon or Chevron. So it's like when I got it in XLE. So when they go into them other companies that I don't have money in, I'm still participating with that rotation. You see what I'm saying? And then I got options. I got 20% set aside for options. So let's just say, if like when consumer staples are doing good, a lot of times tech ain't doing good. You see what I'm saying? So I can use options to play puts against tech, you know what I'm saying, while consumer staples is bumping. And then while tech going down, I can take that money that I'm making off of options and then put it in tech while tech down. You see what I'm saying? And then when consumer staples start dropping, I can use that money to play puts against consumer staples while they dropping. And when they finish dropping, I can take that money I made off them puts and then put into consumer staples while it's down. You see what I'm saying? So that's why I got money for options and then got money for cash. You know what I'm saying? So if like I got most of my money tied up in options and I want to buy something right now, I got cash where I can just jump on something that's on sale right now. So I just want to share that with everybody, man. That's all I got. If you like this, man, hit like. If you think a cousin could get something out of this, man, share it with the cousins, man. And then if y'all got some questions, I'm open to questions. I'm open to questions if you got some questions. Yes, it was. Yes, it was the liquidity run reversal. That was good. 2%. Yeah, and let me say something about the 2%. I want to say something about 2%, right? So, the 2%, like I showed this the other day, the 2% of your overall portfolio is what you're gonna risk on any one trade. So let's just say you got a $3,000 account, and 2% of that $3,000 account is like $60, right? You're doing a day trade on options, right? So you buy, let's say you buy 3 contracts for $100 a piece. That's $300. Let's get the calculator. Let's get the calculator and do this together. Let's get the calculator and do this together. Let's end this slideshow. All right, let's get the calculator and do this together, right? Calculator. So you spend $300, right? You buy 3 contracts for $100 a piece. You got $300, right? right? So $60 is your max loss on your overall portfolio, right? Because you got $3,000 account. Let's get the right numbers. 3,000 times 0.02. $60, right? So $60 is your max loss. Then so you got $300, right? So 60 divided by 300, right? You can risk 20% on that trade, right? You can risk 20% on that trade. So 60 minus 20%, that's $12. So you can, like, when you 60 minus 12, so when you go into that trade, you reset that trade up, you'll put in a stop loss at 48. You buy it for 60, put in a stop loss at 48, and put in your target for whatever you want your. If you're going for a 5-to-1, 60 times 5, because a 5-to-1 is at 20%. 5-to-1 will be 100%. So you'll buy it at 60. You'll set your profit target at 300. You'll set your stop loss at $48. So now you're within your risk tolerance for your overall portfolio. That means you can only lose $60 on that trade, and you're risking, man, that thunder was loud. You're risking $60 to make $300. That's a 5-to-1 risk to reward, right? So if you hit your target, you're making $300. If you get stopped out, you're losing what's that? $60. You're losing $60. So then if you make $300, let me see what that is. You got 300 minus 60. No. Let me see. You make 300. Okay, 300 divided by 3. 1, 2, 3. Right? That's 10%. So you made 10% on the day. You risked 2% and you made 10% because you had a 5-to-1. So, and then if you, let's just say if it's on a day when it's running and you hit, because you can hit 200% in a day on the spot if it's moving good. If you hit 300% on the spot, you can, you know what I'm saying, you can risk 2% and mess around and make whatever. I'm going off on a tangent, man. Do we got any what's for Easter dinner? My sweetie, I saw she was cooking some greens and some chicken and some mac and cheese, dressing, I think some cornbread. Yes, Boogie, journal every trade. Yes, journal every trade. I had an example up. I don't know if you was on the live when I showed the example. I had an example up of how I journal the trades. But it's in the slides. If you download the slides, it's the link in the description. You can download the slides for any Tim's Tidbit. You can pull the slides up. Do anybody got any other questions? We've been on here for 52 minutes. I know it's Easter, and I'm going to be running my mouth again tonight on Supplemental Sunday, so y'all going to see me again. Yeah, Tranisha, it is a big meal. It is a big meal. All right. It don't look like anybody got anything. Do you want to say anything, baby?
Yeah, I got options.
I had added you. You coming in here?
Hey, y'all.
Yeah.
I just want to show y'all my shirt.
Slap over a little bit. There you go. My sweetie say I got options.
It's a conversation piece too.
It's a conversation. My son say when he wear his to school, people be looking at him like, I got options. What do you mean?
That's right, Kevo. Give thanks.
Yep. But yeah, man, I appreciate y'all. If y'all got anything out of this, hit the like button for me. If y'all appreciate that. I appreciate that. I'm sorry, baby. I'm gonna let you do your job. If y'all got anything out of this, hit the like button. If you think a cousin to get something out of this, share it. Like I say, the slides are in the a little player. The slides are in the folder. The link is in the description. The slides that I'm gonna be using on Supplemental Sunday tonight, they in the folder too. It's gonna be a repeat. a refresher for the Spider Gang, but we gonna dive into it again about using futures to plot your options entries and swing trade and entries for shares for the SPY and stuff like QQQ, stuff like that. I trade the SPY, so I'm gonna talk predominantly about the SPY. So y'all pull up on Supplemental Sundays. Tell a friend to tell a friend to tell a friend to tap in. My son says a whole hurricane outside, so we're gonna go ahead and shut it down. We're gonna try to get into our Easter dinner. Appreciate y'all for spending Easter with me. Here to learn and share. Is that the same person that got the shirt already?
I think so.
Are you the same person that got the shirt already? As a matter of fact, I got your shirt over there. I got your shirt over there. I need your.
It just came in yesterday.
You need to DM me your Hold on, let's find out if that's the same person. Is Here to Learn and share the same person, or is that somebody different?
It's Here to Learn and Share.
Is it Here to Learn and Share? Is that you? You the one that already got the sweatshirt for? What, to pass me that shirt in that box right there?
Where is it? Behind here?
Be safe, yeah. Is that you? Are you the one already? If you the one, just say, yeah, that's me. And then we'll figure out something for somebody else. I was in a giving mood today. You probably can't. You can't see it because it's green. It's green. Here it is.
Here to Learn and Share. Say be safe.
Did I just mess it up?
I see it on my side. Oh, she said it's me.
That's you. Okay, it's you. You the person. Okay, here go your shirt.
I take it.
Here go your shirt. Okay.
It's probably too small for you, Carl.
Here go your shirt. All right, so this your shirt. So, okay, so we got. Do you want a T-shirt, or do you want me to figure out something for somebody else? Okay, here go your sweatshirt. I got your sweatshirt right here. I need your mailing address. But do you want a T-shirt to go with the sweatshirt, or do you want me to figure out something for one of the other cousins?
We'll do a drawing next week. How about that?
Nah, cause she got it. So what you want to do? Just say T-shirt or pay it forward. If you say T-shirt, you just gonna get a T-shirt too. And if you say pay it forward, we gonna figure out something for somebody else. Next week. Oh yeah, speaking of next week, Mark Monroe pulling up next week. Mark Monroe pulling up for Tim's Tidbit takeover next week. May the 1st, Dustin Tidbit, my financial advisor, pulling up. He gonna share some retirement information. Mother's Day weekend, that's the 8th. I ain't doing it. We not doing it. I'm hanging out with my sweetie. Mother's Day. And then on the 15th, Stock Zay, the cousin Zay, gonna pull up and drop some gems.
Thank you. I was going to DM you, tell you that you can bless someone else.
Okay, so Here to Learn and Share. She always being here supporting, and she said we're gonna bless somebody else. So I put something like on a story. I'll put something on a story on Instagram, and we'll figure out. I'll figure out what I want to put on the story, and then we'll bless somebody else with a T-shirt.
Am I muted? Well, Denise, why you say that?
Why you say are you muted? Why you say are you muted, Denise? Denise say, am I muted? Look here, just for you, Denise. Here, click that link and pull up. Click that link and pull up and ask me what you want to ask me. You're doing a better job booking them than I. Nuh-uh, you running people off. You running people off talking about Joe Rogan. That was
you gotta keep the Joe Rogan out of your stuff.
This man was fun to pull up with the whole Wall Street of Einstein, the dude that the most photographed person on Wall Street, and then said, "Hey, I'm just like Joe Rogan."
Remember Tim and Corny last week?
Remember Tim and Corny last week? What? I don't know. Oh, muted. yeah. All right. Okay.
Thanks everyone.
Thank you everybody. Ain't nobody clicking the link and pulling up. Shout out Joe Rogan and shout out Trading with a Dummy.
If you
Okay,
have
man.
not seen it, it's on his YouTube
Hey,
channel.
if y'all have not seen it, go to Trading
Trading
with
with
a
a Dummy.
Dummy YouTube channel, right? Go to oh, it's over here. Go to Trading with a Dummy YouTube channel, right? And click on this. Where is it? Boom. Did I hit stop sharing? Why it's not sharing?
Because you got to click on that one. There you go.
No, I want it to be.
What you want to do?
Oh, it's on the wrong one. This one here. That's what it was on single now. Oh yeah, go to YouTube.
Man, leave
go
me
to
alone. I'm sensitive.
go to Trading with a Dummy. Go to Trading with a Dummy, his page right here, and here it is right here. This video right there, one day ago. Joe Rogan. Y'all click. This video is hilarious. Joe, Joe
Right.
Rogan.
I'm sorry, babe. There's no way you are sensitive.
Right here. This video right here. Click on this video right here. This video is hilarious. Y'all go check it out. This is a funny video. Shout out to homie Trading with a Dummy, man. Y'all support his channel.
Give him a hug, too.
He give him a hug too. And if y'all ever seen the Old Spice commercial when the dude was reaching over trying to grab him and he asked him if he used the spray, go look that commercial up. Hey man, we finna get out of here, man. I thank y'all for pulling up on Easter. I appreciate y'all, man. Till the next time, y'all know what it is.